you think star investor Cathie Wood will remain a Tesla bull when Tesla stock starts crashing? Wood has always been known as a proponent of innovation, and Tesla is as innovative as it can get. Still, the company's stock has been taking a beating in the stock market for several months now. You definitely would not want to miss what Wood has to say. ARK Invest CEO Cathie Wood has previously shared her and the company's 5-year target for Tesla, which will end in 2024, which is a base case of $7,000. According to Wood, they have arrived at that price by weighing the probabilities of 10 different scenarios, including bankruptcy. We tried to be as fair and balanced as we possibly could be, but our confidence level that this stock is heading for $7,000 over the next 5 years is very high, Wood said last year. However, technology has been one of the worst performing sectors in the stock market last year, which is in stark contrast to its monster gains during 2020 and 2021. Not even prolific tech investor Cathie Wood has escaped the carnage. Wood is the head of ARK Investment Management, and its flagship ARK Innovation ETF has lost 57% of its value in 2022. ARK is known for investing in innovative companies with long-term time horizons, and despite the ARK Innovation ETF suffering steep losses this year, it has still more than doubled since its inception in 2014. That highlights the importance of ignoring short-term market gyrations and focusing on the big picture. Giving justice to her moniker as a star investor, Wood's trading has certainly been timely, buying back shares when the stock dipped and selling some off after it rose higher. Over the past several months, Wood has been stacking up her Tesla shares whenever the stock dips low. In fact, ARK Invest, the firm led by prominent stock picker Cathie Wood, bought up millions worth of Tesla a few days ago during the electric vehicle maker's worst daily dip in more than 2 years, as Wood continues to double down on what initially brought her riches. Wood's flagship ARK Innovation ETF purchased 145,000 shares of Tesla worth $15.7 million at the automaker's $108.10 closing price several days ago, while ARK's autonomous technology and robotics ETF nabbed a further 31,000 Tesla shares worth $3.4 million, according to daily transaction reports. Those purchases came during Tesla's 12.2% drop on January 4th, its largest single-day decline since September 2020, with the stock now down nearly 75% since November 2021. Wood, who invests in companies engaging in disruptive innovation, made millions amid Tesla and other favorites surge in the early days of the pandemic, before a brutal 2022 sell-off wiped away ARK's gains. ARK owns about $487 million worth of Tesla, its 5th largest holding, most of which is in its signature ETF, which has added more than 300,000 shares of Tesla to its portfolio over the last month. Though an unfavorable macroeconomic environment and elevated interest rates dragged down the market as a whole, Tesla's decline largely coincided with Musk's purchase of Twitter, dedicating much of his time and financial resources to the social media company, much to the ire of Wall Street. Wood has remained bullish during the downturn, predicting last month Tesla shares would reach $1,500 by 2027, representing a more than tenfold increase. According to Wood, there are 3 sources for the increase in their estimated price target. The first was the emergence of the Tesla killers in the market. Because of this, Wood and her firm ARK Invest expect Tesla's market share to go down from 17% globally, including China, to something lower. However, it instead went up to 18% in electric vehicles. So, what we're learning is Tesla is just so far ahead of the pack, and I'm talking about the BMWs, the Mercedes, as far as range and other important metrics when it comes to electric vehicles, said Wood. She added that Tesla's battery cost is 3 to 4 years ahead of any other auto manufacturer in terms of cost declines. So every other auto manufacturer will, if they want to be competitive with Tesla, if they want to be competitive like for like, they will have to sell their cars at a loss. At the same time, they're losing their internal combustion engine business, so there they have a big problem, Wood explained. Most other auto manufacturers, unless they want to lose money on their cars, most are not going to be able to keep up with or to reach Tesla's combination. So that's very important from a performance point of view and a range point of view, said Cathie Wood. When asked about her thoughts on Tesla in 5 years, Wood said that compared to other auto manufacturers, Tesla definitely has an edge. She said that if one analyzes cars not by brand, but by range and power combination instead, Tesla is the best pick among them all. Still, she said that the most famous car brands like Volkswagen and BMW have done wonders in the last few years. It is just that Tesla is way ahead of them in terms of the range and power combination. Wood said that most other auto manufacturers are not going to be able to keep up with or reach Tesla's combination unless they want to lose money on their cars. Wood emphasized that that's very important from a performance point of view and a range point of view. When asked about her thoughts on large corporations competing with Tesla in electric vehicle production, Wood has this to say: "They are failing miserably. Branding is something different. These other auto manufacturers have brands and a lot of brand loyalty. But I think as consumers start to shift from gas-powered to electric and look at the specs of the different cars," says Wood. She said that although they might still be persuaded by brands only, they won't have as good an electric vehicle as Tesla will produce. In a Yahoo Finance interview, ARK's CEO Cathie Wood emphasized their belief that gas-powered vehicles are going to be obsolete within the next 5 to 10 years, and the traditional auto industry has to figure out a way to migrate to electric vehicles. In mid-October, another ARK executive expressed optimism about the leading EV company. During a CNBC's Squawk Box interview, ARK Invest CFA Tasha Keeney shared the reason for ARK's positive stance on Tesla. Keeney said, "Electric vehicles are just single-digit percentage points of overall auto sales, so we have to remember that it's still an early market. But we do definitely see Tesla as one of the market leaders both in electric vehicles and in autonomy." In a more recent Yahoo Finance interview, the ARK founder and CEO said she was not concerned about Musk's leadership at Tesla. This is amidst growing concerns from investors that Tesla CEO Elon Musk has been losing focus on the EV company as he is spending much of his time at Twitter. Wood told Yahoo Finance that Elon's main role at Tesla right now is moving it towards an autonomous taxi platform, which I think will happen in 2024. I think he thinks it will happen next year. I think he's as focused as ever on that. Today, not only is Tesla the largest producer of electric vehicles in the world, but it's also the only profitable pure-play EV stock investors can buy in the US right now. Tesla's competitors are either existing car makers that are still carrying their legacy combustion engine vehicle business, or they're new up-and-coming EV hopefuls that haven't scaled production yet. Moreover, Tesla has developed some of the most advanced autonomous self-driving software, which could be the future not just for personal vehicles, but also for the mobility industry. The company has revealed plans to release a fleet of fully autonomous robo-taxis in 2024, which won't require any human intervention. One estimate suggests autonomous vehicles will be a $2.1 trillion market opportunity by 2030. According to Cathie Wood, there are a lot of innovations in the auto industry that put the traditional auto industry, and consequently traditional automakers, in harm's way. Wood pointed to Tesla's autonomous taxi platform as an example of such innovative change. Beyond the car industry, Tesla continues to expand its presence in residential solar and battery storage. Demand is growing rapidly, and the company has utilized a new facility solely to produce these batteries to ensure adequate supply. According to Tesla's 2021 impact report, the company has deployed 4 gigawatts of solar systems since 2012, generating 25 terawatt-hours of clean energy. That's more energy than every Tesla vehicle and every Tesla production facility has consumed over that time frame combined. It's cementing Tesla's legacy as a true green energy company and not just a car maker. Tesla and the EV sector in general is entering a new phase, and the company is positioning itself to continue to lead the way forward. While returns over the coming years may not match prior results, Tesla has a lot of irons in the fire. It's worth looking closely at whether now is a good time to invest. Overall, Cathie Wood remains more bullish than ever on Tesla stock. Wood, who is a huge proponent of innovation, continuously shows her support for Tesla and its forthcoming innovative projects. Wood's recent purchases during dips shows that she sees them as a buying opportunity instead of a cause for concern. Subscribe to this channel for more.